Hey guys, Evans here. So if you're just starting to learn how to trade or already trading on the pocket option platform and often catch yourself making mistakes, this video is for you. Today, I will show you the platform from the inside, analyze some common beginner mistakes, and demonstrate on a few real trades the logic behind entries so that you won't be pressing buttons randomly. If you like this format, I have a Telegram channel where I post my everyday trading, my everyday trader's life, and also publish personal signals that you can just simply copy and follow. So the link is in the description. Let's pay attention to the screen. Right now we're in the quick trading mode, an ideal starting point for beginners just getting into trading. The interface is very user-friendly, the platform is clear, and there are actually no complicated settings. So the biggest mistake in losing money is not because of a beginner strategy, but because of incorrect actions. So like pressing the wrong button, trading without understanding, and so on. I'll try to share my experience and show how to use the platform safely so that you don't blow your whole deposit. So where do we start off? First of all, we need to select the currency pair that we want to work with. So right now I have the Euro USD chosen. As an example, today I'll trade on several pairs, then set the time frames. This determines the interval, 5, 30 seconds, to analyze market momentum. Right now, looking at the chart, we see candlesticks. So upward candles, a clear bullish impulse with long candles at the peaks that indicates strong momentum. Now things are slightly balancing out. I'll switch to a 30-second time frame, still showing an upward trend. You can also use a 1-minute chart, which makes the trend even more obvious. To help you out even more, we can draw trend lines that show the direction of the chart that help identify the market direction. So here we find the trend line. We place it on the high of our chart. And as you can see, the chart is bullish, so an obvious bullish trend. We also can mark horizontal support and resistance levels. So we just find the horizontal line. These lines help us analyze corrections and drawbacks. Here I'm just showing you how to work with the chart. So here on the right, we can see our order settings, the time frame, the volume of the bid that we're gonna work with. So also we can choose the chart type. I prefer using candlesticks like we have right now because they give lots of information about the market sentiment and help with analysis. There are also bars. We have other types of candles. They're like reverse candles. We also have lines. But here we have the lines, but I like to use the classic candles. In the future, we'll come back to other types and work with them, but for now we'll stop on classics. The candles, they show the trend and momentum very well. So the long candles upward signal a strong bullish move, while shorter candles, potential like corrections and drawbacks. So yeah, the overall market shows an obvious uptrend. So as long as these candles continue to grow, so we'll just watch the market for a bit. Yeah, so we see that it's a bullish uptrend, but it's slightly pullbacking. I'll open my first Euro USD trade. I'll set the volume to say $30 and stay on a 1-minute time frame. Right now the trend is upward, but there's a slight dip. I'll just wait for the price to dip a little bit more, and then I'll open a buy order. Since the overall picture shows bullish momentum on this time frame, I will just wait I'll place a horizontal line that will show the drawback of the downward trend candle. Yeah, I just wait for a slight retracement, and then I'll place my order. Okay, so here I see an upward candle, perfect timing to open a buy. The candle closes and shows the market moving up, which is a good signal. I place a trade of the same size and now I just wait. So it's very important to define how much money you're willing to risk. Usually it's like 2 or 3% of your deposit. This way, if you win, you profit, and if you lose, the damage is minimal. Never risk your entire deposit or even half of it. Doing that can quickly wipe you out just after a few trades. So better to make several good, cautious trades than to gamble randomly, and never trade without analysis. This isn't a casino. Study the market, perform technical analysis, and look at different time frames. So consistently trading profitably requires a disciplined approach. Currently, I've secured a profit of $57.60. That's our first successful trade. Next up, we'll just move to another pair. For example, pounds to Canadian dollars. Here, the main trend, as we can see, is downward, a obvious bearish trend. We'll check the hour time frame. There was a great leap upward, and after we can see downward candles. As you can see, yeah, this big downward candle, and right now we're in a dip. So let's switch back to the minute time frame. Now candles are moving higher, so I'll get ready a buy position, expecting good continued growth. Yeah, so we just continue with a buy order. And for instance, big candles like wicks or signs of upward impulse are good entry points. I set the same volume on the same time frame and wait for the move to develop. If the market shows a reversal signs against my position, I'll just close early with minimal loss. But I see that the market is still in a upward impulse, so I just hold the position. So analyzing on multiple time frames helps confirm the trend. Plus remember, don't rush to take quick profits. Proper analysis helps you enter trades confidently. Yeah, so don't neglect market analysis. So in the end, this trade was successful, earning $54. It's all based on market analysis. So we considered the main trend, identified false breakouts, impulses, and based on decisions on upward and downward signals. We analyzed different time frames where we see that the wick of the candle gives us obvious signals of an increase. So the key point to trading is don't rush and always manage your risks. So in conclusion, I want to say that the most common mistakes among beginners are poor money management and trading without a system. So without proper analysis of the trend, never risk more than 2-3% of your deposit per trade. If the market moves against you, better to close early than hope for a miracle. Also, it's very important. Avoid trading against the trend. Determine the trend on different time frames and don't automatically press buy or sell without analysis. This is not a casino. I'll repeat myself. Trading is about analysis and strategy. Discipline and a plan are the keys to steady profits. Remember, your goal isn't quick money, but it's about avoiding quick losses. A quick loss happens when you ignore risk, neglect market analysis, and don't manage your trades properly. So a careful, disciplined approach is your best tool for long-term earnings. So I've shown you the main buttons and tools here: time frames, candles, trend lines, horizontal levels. So the more attention you pay to analysis, the faster you'll learn to trade profitably. So don't rush, do everything consciously, and eventually the money will flow to you. So pay attention, guys. Most of the mistakes I pointed out today are made not because the market is difficult, but because people rush and trade without a system. If you want to see how I trade in real time, why I make certain decisions, and how I work with this platform every day, I share all of this on my Telegram channel. There, I also publish personal signals that you can easily copy and follow. And also, I post not only like trading, but also my personal life without any filters. So the link to the channel is in the description. Subscribe and see you there. This was Evan. Goodbye and see you guys.